Well, happy Monday, folks. And Monday is our economic forecast for the week when it comes to real estate. So what we talk about each Monday is the economic events taking place this week that might play a huge role when it comes to real estate, especially mortgage rates. So what you're seeing on the screen right now are the top 6 programs people use when they're buying their first house. But if you noticed over there on the 30-year fixed, remember just a week ago, rates peaked over 8%. 8%. I never thought I'd see that in my lifetime again, but they're at 8%. Where they are today, 7.375. So almost 0.75% lower in rates. Well, since the Federal Reserve announced last week that they're not going to change interest rates. So your question might be, okay, Dan, Federal Reserve didn't do anything, so why did rates come down dramatically? That's a great question, so let's get to it. Well, what the Federal Reserve's been trying to do is they've been trying to tame inflation, and how they've been doing that is increasing what we call the federal funds rate. Federal funds rate is basically the only interest rate that the Federal Reserve controls. But the biggest thing here is what are they trying to do? What are they trying to accomplish? They're trying to drive down inflation. Okay, so what causes inflation? Well, too few products being chased by too much money. Okay, during the pandemic time, people couldn't spend their money on leisure, couldn't go out to dinner, you couldn't go out to movies, you couldn't go out to bars and recreational things, you couldn't basically do anything. So we were forced to stay home and just buy stuff. Okay, that's what's caused the prices of everything to go up and up and up. Okay, one of the biggest components of this was all the stimulus money that was pumped into the system. Okay, so now what's happening is the Federal Reserve is basically on the rant of they want inflation to get back down to the 2% range. So what happened last week was a whole bunch of data that came in that's showing there's cracks in the foundation. Okay, so let's think of this. Inflation is caused by too few goods chased by too much money. Okay, so what's happened over the last week is we really haven't had much to do with the supply of things, but now the too much money part is really what's taking effect. So let me explain. Last week we had the unemployment rate spike up to 3.9%. We haven't been there in a while. Okay, so now we see more and more people losing their jobs. Okay, the continued jobs claims, more and more people are staying on unemployment. They can't find that job. Okay, that's another piece of this equation. Then the last thing is wage growth. Wage growth has basically peaked out and is starting to come back down now. So what this means is there's less people working and they're making less money. So on the Federal Reserve's front, they're like, okay, this is great news because it's going to start driving down the prices of things. And we're starting to see that take place as we speak. So that's basically the backdrop of what's happening behind the scenes. We are starting to see cracks in the economic foundation of our economy. That's putting basically the Federal Reserve on pause to say, okay, our policy things that we've been doing over the last year and a half is starting to work. So we're just going to sit on the sidelines and let this take effect to see where it takes us. And a lot of the data that we're getting in, especially last week after the Federal Reserve met, is right in that wheelhouse. Okay, so let's get back over to interest rates. Here's where interest rates were. Okay, here's what I want to give you guys some advice on though. Remember just last week rates were 8%? Well, what happens if you locked in? Well, in most cases you're stuck. You can't do anything. You locked in the rate. You can call back the bank, say, I know rates went down dramatically. Is there anything I can do? They're going to do one of two things. They're going to say, yes, we can do something, but it's going to cost you. Or they're going to come back and say, we apologize. There's nothing we can do. So that's where we come into play. My name is Dan Frio. I work at a federal bank, which makes it we're licensed in all 50 states as well as Puerto Rico. So anywhere out there in the country that you're watching this, we can help you. The next thing is we're one of the country's largest mortgage brokers. Now, why does that play a role in this? Well, we have over 70 different lenders that we work with. So let's use this analogy. Let's say last week, and we've done this with a lot of our borrowers. Let's say last week we locked you in because we didn't know if rates are going to just keep going up and up and up and up and up. So what happens is you're locked in. You got that rate. Well, now rates went down. What can you do? Well, like I said, in most cases, you can call and see if you can renegotiate that. It's going to most likely come with a fee. They're going to say you can't do anything. Here, what we can do, we can actually call the bank that we locked you in at and said, can we renegotiate these terms? Sometimes they say yes, sometimes they say no. If they say no, then I'll say, well, please just withdraw my application, and I'm going to take this to another bank, another one of those 70 different lenders we work with, because I can offer you their programs and their rates. So if you're locked in, I got maybe some good news for you. If you haven't locked in, I'm going to teach you where you find information about us to help guide you through this storm of buying your first house. What I need you to do is go over to the rateupdate.com and right through here. We added a couple features to this not too long ago. One is the loan estimate tab. So what happens is once you lock in your rate, the lender has to send you a loan package. That package is going to be probably about 30 or 40 pages long, but a piece of that package is going to give us what's called the loan estimate. It's going to go over your cost of the loan, the interest rate, the loan amount, the terms, and everything about the loan. What I need you to do is upload that loan estimate into us. We're going to analyze it with over 70 different lenders throughout the whole country to see if we can get you a better rate than what you locked in at. But if you're out there and you're like, Dan, I don't know if I can qualify for a home. I don't know if I make enough money. Don't know if my credit's good enough. Well, what can I do? Well, let us help you guide you through this. What you're going to do is click the Apply Now tab over there. It's not going to launch you directly to our application system. It's actually going to ask you a few questions to vet you to see what kind of programs you're looking for so we can assign you to a specialist on our team. But you might say, Dan, can I call in? Can I email you guys? Well, yeah, just go to the rateupdate.com. You're going to scroll down through here. It's going to give you some blogs, some tutorials, different loan types that we have, mortgage calculators. And when you get to the bottom of the rateupdate.com, you're going to see a couple different things right through here. You're going to see the phone number you can reach us, 844-775-5626, or you can email me directly, and I love answering questions. I do about 20 or 30 of these a day. So you can email me at dan@therateupdate.com. So I hope you found value in today's video. If you did, please don't forget to give me a thumbs up, subscribe down below. We'll see you tomorrow for Tips Tuesday, where we're going to talk about, do you pay off those collections or judgments, or do you wait? The answers might surprise you. Take care. See you tomorrow. Bye-bye.